Is Energy Transfer stock a smart buy right now? That's the big question we're tackling today. Welcome to Global Value, and in this video, we're going to dive deep into a thorough analysis of Energy Transfer ET stock, emulating none other than Warren Buffett, one of the greatest investors of all time. We'll scrutinize the key numbers that Buffett values most, and then we'll calculate 3 different fair values for Energy Transfer to really understand what it's worth in today's market. Make sure you stay with me till the end because our combined fair value and rating might just take you by surprise. And there's more. I'll also reveal a crucial bonus metric that could be the deciding factor when adding ET stock to your portfolio. So, is Energy Transfer a golden opportunity waiting to be seized? Let's find out together. Right now, Energy Transfer stock trades for $13.74 per share. 2023 has been very good to the business. Their stock price is up 18%, which is around what the S&P 500 is up by. But that's not all for shareholders. Right now, Energy Transfer pays a market-beating 9.01% dividend yield. Their average dividend yield is added to the returns in their stock. In the last 5 years, Energy Transfer stock is about flat. Still with dividends, they're up over this time, and they're actually pretty close to beating the market. In the last decade, their stock price is down 31.5% overall. Again, with their dividends reinvested, these are positive returns to shareholders. When we go back before the global financial crisis, in the last 17.5 years, Energy Transfer is compounding at 4% annually. They were crushing the market up until 2015. Since around 2019, they started to underperform the market. This came a year after their consolidation in 2018. Still, with their dividends reinvested, they beat the market over this time. But the burning question is, why should we be paying close attention to Energy Transfer? Right now, their stock trades 50 cents below its 52-week high. They're only up $2 from its 52-week low. They have some short interest with just under 2% of their shares sold short. And how big is Energy Transfer? They're pretty big. They have a $43 billion market cap, and with the debt they use in the business, they have a $105.5 billion enterprise value. So what does Energy Transfer actually do? Energy Transfer owns a large platform of crude oil, natural gas, and natural gas liquid assets, primarily in Texas and the US mid-continent region. It also has gathering and processing facilities, one of the largest fractionation facilities in the US, and fuel distribution. Energy Transfer also owns the Lake Charles gas liquefaction facility. It combined its publicly traded limited and general partnerships in October 2018. In August of 2023, the company announced they're buying Crestwood Equity Partners for $7.1 billion, including their debt. This comes as there's a lot of consolidation in the oil and gas industry, especially this year. That's the case with these pipeline companies as well. Earlier in 2023, Energy Transfer also bought Lotus Midstream for $1.45 billion. They're continuing to make deals very aggressively. Now with that understanding, let's dive into the numbers Warren Buffett cares most about. Starting with metric number 1, we want their average return on capital in the last 5 years to be above 14%. A normal business earns 7% returns on capital. When we look for a benchmark that's double this, we can build in margin of safety based on the quality of the business. Energy Transfer's returns have been in the mid to high single digits through most of these years. They hit a low of just under 7% returns in 2020. Since then, these have increased. When they're averaged out in the last 5 years, Energy Transfer earns around 8% returns on capital in a given year. While it's just slightly above average, that's down from our benchmark. This means this is an X on metric number 1. Metric number 2, we want to see sales and free cash flow growth. These are 2 numbers that really matter for master limited partnerships. In this time, the company has grown their sales by 45%, and their free cash flows have gone from being negative in 2018 to being positive in all the rest of these years and today. It's growth for both of these, meaning this is our first check on metric number 2. Metric number 3, we want their shares outstanding to be decreasing. We don't want companies to give away pieces of great businesses to acquire so-so ones. The company has made some big moves over this time. They consolidated their general and limited partnerships in October of 2018. This increased their shares outstanding by a lot. They also acquired SEM Group in September of 2019. This was for $5 billion, which added more capital to their business. Again, recently in August of 2023, they announced that they were acquiring Crestwood Equity Partners for $7.1 billion. Because they've been pretty active in mergers and acquisitions, they've diluted shareholders over this time. Their shares outstanding have more than doubled. You'd have to dig into this to see if it really created value for shareholders or not. Companies can make more mistakes using their shares to pay for acquisitions than they can in cash most times, especially if they're not trading for huge, egregious valuations. So this is something you'd want to dig into. It's not necessarily what we want to see. This is an X on metric number 3. In metric number 4, we want to put our previous metrics together. Here we want to see free cash flow per share growth. In this time, the company has taken their free cash flows from being negative in 2018 due to their consolidation to being positive in each of the last 4 years and today. They've grown their free cash flows, so even though their shares outstanding have doubled, their free cash flows per share are up. It's a check on metric number 4. This means that through 4 metrics, we're split evenly. Energy Transfer has 2 checks and 2 X's. Before we look at the company's balance sheet and get into our valuation estimates, how about we check in on our bonus? Right now, Energy Transfer pays a huge market-beating 9.01% dividend yield, but is this safe and can this grow in the future? That's what we want to figure out through our bonus. We want their dividends to be supported by their free cash flows. They've had a rough track record with this in the past, but things have really looked better for the company since 2020. In 2021, 2022, and 2023, they've comfortably supported their dividends using their cash flows. These are well covered today and they've been growing since 2021. It's what we want to see. This is a check on our bonus. It looks like Energy Transfer is able to support their dividends, at least for now. In recessions, it's businesses with too much debt that can have the biggest losses and even go broke. In metric number 5, we want their net debt to be below the sum of their free cash flows in their last 5 years. In this time, Energy Transfer has maintained its net debt position. Today, they have around $48 billion worth of net debt, and in the last 5 years, they've only brought in $18 billion of free cash flow. That's less than half of their net debt position. Keep in mind their free cash flows were negative in 2018, and they've had more free cash flows in their last several years. Still, those wouldn't fully support their debt loads. This means it's an X on metric number 5. Dig into the company's filings to see if this could cause trouble or not. As an oil and gas pipeline business, they're just going to have more leverage than a normal company. This is because they have a huge amount of fixed assets. So almost like a real estate company, these can be more highly levered. A lot of their sales are contracted, so it can make for reliability in their business that further supports these high debt loads. It may or may not be that much of an issue for the company. You just really need to understand when this debt would come due because you want their debt obligations to be met by their free cash flows. Now with their debt out of the way, what's Energy Transfer possibly worth? The big metric of them all, metric number 6, we want Energy Transfer's average 5-year free cash flow divided by their enterprise value to give us a yield that's above 5%. This is the first of our 3 valuation methods. If it's the case, it gives a slight risk premium to the yield of the 10-year treasury. Right now, Energy Transfer has a $105.5 billion enterprise value. This adds their net debt and their market cap together to look at Energy Transfer like it's a private business. In the last 5 years, we learned they brought in $18 billion of free cash flow. This means they bring in $3.6 billion in an average year. When we divide that by their enterprise value, it gives us a 3.4% average free cash flow yield. Today, the company brought in $6.3 billion of free cash flow in their last 12 months. When we divide that by their enterprise value, it gives us a 6% current free cash flow yield. These yields are split on either side of the 10-year treasury and either side of our risk premium, but we were looking for an average because free cash flows can be lumpy year to year. But still, it means on metric number 6, this is an X for the business. You're going to want to stay and watch till the end of the video when we estimate their fair market value and give our final rating. Everything we've covered so far is important, but there's something missing. This, in my opinion, is the main reason to analyze Energy Transfer. It takes us to use a discounted cash flow valuation to estimate their fair value per share. It's based on their business predictability, which they haven't had a ton of in the past. This is due to their acquisition fuel growth. Still, we're going to take an average of their free cash flows and then use historical assumptions to project these into the future. It's up to you to figure out if those will be accurate or not for Energy Transfer. If we start with an average of their last 3 years of free cash flow, then assume that these decline at 5% in each of the next 10 years. In the following decade, if we assume these shrink at 7% annually, we're also going to add in their tangible book value to give an estimate of their net worth. If we want a market-beating 15% rate of return, which is what Warren Buffett looks for from his investments, at today's valuation multiples, an estimate of Energy Transfer's fair value per share is around $17. Keep in mind this is a rough estimate for the business. Their 9% dividend yield would already be included in this rate of return. Right now, Energy Transfer trades in line with its historical valuations. We're also going to take a guru focus value for Energy Transfer. This is based on where they've traded compared to their past, their business predictability, and analyst estimates for their future. Right now it comes in at $11.50 per share. This isn't financial advice. You need to do what's right for your own personal finances. And so far we've looked at most of the numbers Warren Buffett cares about, but it's the qualities of a business that are even more important to him. Why don't we learn what these are for Energy Transfer? We're going to start with a long thesis first. Number 1, Energy Transfer's consolidation in October of 2018 reduced the company's cost of capital and helped fund its growth projects over the last few years. Number 2, Energy Transfer is diversified across markets, commodities, and geographies, giving the company access to many large customers. Number 3, Energy Transfer is well positioned to benefit if there's growing natural gas liquid exports. But it's not all sunshine and roses for the business. Let's look at a short thesis as well. Number 1, a long-running legal battle threatens to halt operations on the Dakota Access Pipeline, demonstrating the substantial legal and regulatory risk Energy Transfer faces. Right now, they own a 34.6% interest in the company developing the pipeline. Number 2, Energy Transfer has historically been active in the mergers and acquisitions market, exposing the firm to the risk of overpaying for growth, as the enabled transaction demonstrates. Number 3, rising interest rates could make Energy Transfer's distribution less attractive as a fixed income alternative and raise the company's cost of capital. That's a big one to pay attention to, as the company has so much debt. Now it's the moment you've been waiting for. Let's put together their qualities, numbers, and estimates to figure out what their fair market value is. So far in our analysis of Energy Transfer, stock ticker ET, we learned the company goes 2 for 6 on our Select 6 analysis. The company restructured itself by consolidating. They've also continued to grow through acquisitions like they have for much of their history. Their free cash flows don't fully support their debt loads, but there are reasons that could be okay due to their high number of fixed assets as a midstream pipeline company. Their dividends are covered today, but they haven't been in some of their history. The company's free cash flow yields also look split, so they may or may not be attractive compared to the 10-year treasury. Right now, Warren Buffett doesn't own Energy Transfer, but these 3 super investors do. It's a big holding for Leon Cooperman and David Abrams. David Tepper, owner of the Carolina Panthers, also has a 3% position in the company. Buffett may not own Energy Transfer, but he still likes the pipeline industry. Berkshire Hathaway Energy's pipeline group transports approximately 15% of all natural gas in the United States. Through Berkshire Hathaway Energy, they own more than 21,000 miles of pipeline. When we put all our estimates together, right now it looks like a fair value for Energy Transfer is around $12.50 per share. That comes in $1 below their current stock price. Keep in mind this isn't financial advice, and you need to do what's right for you personally. It's about $5 above their street target price. Based on that, it looks like Energy Transfer is about fairly valued. If you enjoyed today's ET stock analysis, like it, subscribe to the channel for more, share your thoughts in the comments, and watch this next video.